Circle Internet Financial, the company behind the USDC stablecoin, is preparing to list on the NASDAQ stock exchange. This is a landmark event for the cryptocurrency and financial technology industry. One of the most important firms in the space is joining the mainstream, signaling a new level of maturity for digital assets. This move could help build trust in the digital asset ecosystem. A successful listing for Circle could pave the way for other crypto-native companies, bridging the gap between traditional finance and blockchain technology. It represents a convergence of traditional capital markets and decentralized finance. It will also give everyday investors a chance to own a piece of a leading company in the fast-growing stablecoin market. It is the beginning of a new era where blockchain-based finance steps into the global spotlight. At the heart of Circle's business is a stablecoin, USD Coin or USDC. Unlike volatile cryptocurrencies like Bitcoin, USDC maintains a stable value, pegged 1-to-1 with the US dollar. This stability makes USDC a practical tool for everyday financial transactions. For every USDC in circulation, Circle holds a corresponding dollar or equivalent asset in reserve, held in regulated US financial institutions. This backing gives USDC its credibility. Circle publishes reports verifying sufficient reserves, providing confidence for users. USDC's simplicity has made it a trusted stablecoin, operating on multiple blockchain networks. This stablecoin powers Circle's ecosystem and acts as a bridge between traditional banking and blockchain finance. While USDC is Circle's most famous product, the company's ambitions extend far beyond just managing a stablecoin. Circle is building a comprehensive suite of financial tools and services designed for the internet age. The company's mission is to create a global economic system that is more open, inclusive, and efficient. To achieve this, it provides businesses with the infrastructure they need to integrate digital currency payments and treasury operations. This includes a set of powerful application programming interfaces or APIs. These APIs allow developers to easily embed USDC payments and other financial services directly into their own apps and platforms. One of Circle's key offerings for businesses is the Circle account. This platform acts as a one-stop shop for companies looking to operate in the world of digital currencies. Through the Circle account, businesses can mint and redeem USDC at scale. They can also manage their digital asset treasury, make global payouts, and accept payments from customers around the world. This service is particularly valuable for global businesses, marketplaces, and fintech companies that need to move money quickly and cheaply across borders. It bypasses the slow and expensive correspondent banking system, offering a modern alternative for global commerce that operates at the speed of the internet. Beyond its business-focused solutions, Circle is also thinking about how its technology can be used by everyone. The company is actively working with partners to bring the benefits of USDC to a wider audience. This includes collaborations with crypto exchanges, wallet providers, and financial applications. The goal is to make it as easy to send and receive a digital dollar as it is to send an email or a text message. By making USDC widely available and easy to use, Circle aims to empower individuals and small businesses, particularly in regions where access to traditional banking services is limited. This focus on financial inclusion is a core part of the company's long-term vision. Ultimately, Circle sees itself not just as a crypto company, but as a full-stack financial technology firm. Its products are designed to serve the entire economic spectrum, from individual developers to the world's largest corporations. The public listing on NASDAQ is a strategic move to raise the capital and credibility needed to realize this grand vision. The company is betting that the future of finance will be built on public blockchain infrastructure, with stablecoins like USDC serving as the primary medium of exchange. Circle was founded in 2013 by Jeremy Allaire and Sean Neville. They shared a vision for the future of money, believing the internet's transformative power could reinvent the global economic system. Together, they recognized Bitcoin's potential as a foundation for a new, open financial infrastructure. Their mission, to make using digital money as easy as sending an email. They envisioned a world where money could move globally, instantly, and at almost no cost, built on open blockchain protocols, breaking down barriers. Their goal was to upgrade the global economy, making it more equitable and efficient. They secured early-stage funding, including from Goldman Sachs. Circle set itself apart by engaging with regulators, becoming a compliant player. Circle's first product, launched in 2014, was Circle Pay, aiming to be the Venmo for Bitcoin. It allowed users to easily buy, sell, hold, and send Bitcoin. But the company soon ran into a major challenge: Bitcoin's price volatility. The company began adding traditional fiat currencies to its platform. By 2016, Circle Pay allowed users to hold and send US dollars, British pounds, and euros. This move was a crucial shift, from being a pure Bitcoin company to becoming a broader social payments application directly competing with services like PayPal. The company's focus began to shift toward building the infrastructure for a more stable form of digital money. By 2017, Circle realized digital currency needed the stability of the dollar and the benefits of blockchain. Existing stablecoins lacked transparency and trust, so Circle saw an opportunity. They launched USDC in partnership with Coinbase, forming the Center Consortium to set standards and governance. USDC was designed to be fully reserved, regulated, and transparent, with monthly public attestations of its dollar-backed reserves. This transparency set USDC apart, attracting businesses and institutions. Circle shifted focus from consumer apps to building financial infrastructure around USDC. This move transformed Circle into a key player in the digital asset economy. Circle knew success meant working with regulators, not against them. They secured money transmitter licenses across the US and abroad, showing commitment to compliance. Jeremy Allaire actively engaged with policymakers, advocating for clear, innovation-friendly regulations. Circle's monthly reserve attestation set a new industry standard for transparency. This approach built trust with both users and major financial partners like BNY Mellon and BlackRock. By prioritizing regulation and transparency, Circle established itself as a reliable, trustworthy company. This foundation is crucial as Circle enters the public markets. USDC is Circle's flagship stablecoin, always redeemable one for US dollars. Unlike volatile cryptocurrencies, USDC offers stability and reliability for digital transactions. Every USDC is backed by cash and short-term US Treasuries with monthly third-party attestations. USDC operates on multiple blockchains, making it accessible for developers, businesses, and individuals. Its interoperability drives adoption across Web3 and decentralized finance. USDC bridges traditional finance and the digital economy, enabling instant, low-cost global value transfer. For businesses, it streamlines treasury and payments. For individuals, it offers a stable digital currency. USDC is foundational infrastructure for the new internet economy. The Circle account is a digital treasury platform for businesses. Companies can easily convert between fiat and USDC, minting or redeeming as needed. It enables fast, global payments and efficient cash management, bypassing slow traditional banking. Businesses can hold, manage, and move digital assets securely with robust compliance and reporting tools. Multi-user permissions enhance security and internal controls. The Circle account removes technical barriers, making digital currency adoption practical for any business. It's a modern gateway for companies to leverage USDC in their core operations. Circle's APIs let businesses and developers embed USDC payments and wallets directly into their products. The Payments API enables global USDC acceptance. The Payouts API streamlines mass payments. The Wallet API lets companies create secure digital wallets for their users, powering peer-to-peer transfers and more. These APIs handle blockchain complexity, making integration simple and fast. Circle's tools enable any business to offer advanced fintech services, embedded finance, without building from scratch. Thousands of companies use these APIs to innovate in financial services. Circle is building the protocol for value transfer on the internet. Fragmentation across blockchains made moving assets difficult and risky. Circle's cross-chain transfer protocol, CCTP, solves this by letting users move USDC seamlessly between blockchains. CCTP burns USDC on the source chain and mints it on the destination, eliminating third-party bridge risks. Users enjoy true portability. Developers can build multi-chain applications with unified liquidity. CCTP reinforces USDC as the universal digital dollar, supporting a unified Web3 ecosystem. It's a public good, designed for integration into wallets, bridges, and apps. CCTP cements Circle's role as essential infrastructure for the future of finance. Recognizing that the future of the internet is increasingly decentralized, Circle has developed a dedicated suite of products known as Web3 services. This platform is specifically tailored to help developers and businesses build and scale applications for the new Web3 economy. While the APIs provide foundational payment and treasury tools, Web3 services goes a step further, offering more specialized infrastructure to interact with public blockchains and smart contracts. This suite is designed to abstract away much of the underlying blockchain complexity, allowing developers to focus on creating great user experiences rather than wrestling with low-level protocol details. One of the core offerings within Web3 services is the Programmable Wallets platform. This product provides developers with a powerful wallet infrastructure that is both secure and customizable. It allows companies to embed multi-chain wallets directly into their apps, giving their users a secure place to store USDC and other digital assets. Crucially, these wallets are designed to be user-friendly, abstracting away concepts like seed phrases and gas fees that often create a high barrier to entry for mainstream users. This enables Web3 applications such as games or social media platforms to onboard users with a familiar Web 2 style login, like an email address or social account. Another key feature of Web3 services is the smart contract platform. This tool helps businesses safely deploy and manage smart contracts, which are the self-executing programs that power decentralized applications. Deploying smart contracts can be a risky and complex process, prone to bugs and security vulnerabilities. Circle's platform provides developers with audited, pre-built smart contract templates and management tools to simplify this process. This allows businesses to more easily launch projects like NFT marketplaces, loyalty programs based on digital collectibles, or on-chain governance systems, all while adhering to high standards of security and reliability. Through its Web3 services, Circle is actively working to accelerate the transition from the current internet, or Web 2, to its next evolution, Web 3. The company understands that for Web 3 to achieve mass adoption, it must become as easy to use and build for as the web we know today. By providing this essential developer infrastructure, from user-friendly wallets to secure smart contract management, Circle is lowering the barrier to entry for a whole new generation of builders. This positions Circle not just as a payments company, but as a key enabler of the entire decentralized application ecosystem, ensuring USDC is at the heart of this new digital world. When you combine all of Circle's products and services, a clear picture emerges. The company is not just a one-trick pony focused solely on its stablecoin. Instead, Circle has meticulously built a comprehensive full-stack platform designed to serve the entire spectrum of the digital economy. At the bottom layer is USDC, the stable, transparent, and multi-chain digital dollar that acts as the foundational asset. This is the reliable value layer upon which everything else is built. Its stability and regulatory-first approach provide the trust necessary for businesses and institutions to participate in the on-chain economy with confidence and security. The next layer consists of the core business and developer tools, the Circle account, and the powerful suite of APIs. The Circle account serves as the primary gateway for businesses to access the digital asset world, providing a secure and regulated environment for minting, redeeming, and managing USDC. The APIs extend this functionality, allowing thousands of other platforms to embed Circle's infrastructure into their own products. This creates a powerful network effect, where the more businesses and developers that build on Circle, the more useful and ubiquitous USDC becomes. This layer effectively connects the traditional financial world to the new one. Sitting at the top of the stack are the forward-looking infrastructure products like the Cross-Chain Transfer Protocol, or CCTP, and the broader Web3 services platform. These solutions are designed to solve the next set of challenges in the digital asset space. CCTP addresses blockchain fragmentation by enabling seamless interoperability, ensuring USDC can flow freely across the entire ecosystem. The Web3 services platform, with its programmable wallets and smart contract tools, empowers builders to create the consumer-facing applications that will ultimately bring billions of users into the decentralized economy. This top layer is focused on growth, innovation, and future-proofing the entire ecosystem. Together, these layers form a cohesive and synergistic platform. Each product reinforces the value of the others. The widespread availability of USDC makes the payment APIs more powerful. The ease of use of the Circle account encourages more businesses to adopt USDC. The innovative potential of the Web3 services drives more demand for a stable, interoperable asset like USDC. This full-stack approach makes Circle a central and indispensable player in the digital finance landscape. It is not merely offering a product, it is providing the picks and shovels for the entire industry, positioning itself to grow alongside the entire digital asset economy. Circle's products are actively being used by thousands of businesses to solve real-world problems in global commerce and online marketplaces. Circle's technology offers a powerful alternative to slow, expensive, and fragmented traditional systems. A global marketplace can use Circle's APIs to accept USDC payments from customers anywhere in the world. This streamlines the checkout process, reduces transaction fees, and provides near-instant settlement. Major companies like Mercado Libre have integrated USDC, allowing millions of users to purchase digital dollars. This extends beyond e-commerce to B2B platforms, SaaS companies, and import-export businesses. By using USDC, companies can reduce operational overhead, improve cash flow, and offer a better experience. Circle is impacting how companies manage internal finances, especially treasury operations and cross-border B2B payments. Circle offers a modern solution, allowing companies to manage global treasury from a single platform, operating 24/7. Global businesses use Circle for international payroll and supplier payments. A US company can fund its account with US dollars, convert them to USDC, and send payments using the Payouts API. Recipients get funds in minutes as stable digital dollars. In 2023, Circle's platform processed over $12 trillion in on-chain transaction volume. The ability to move millions in minutes can be the difference between seizing an opportunity and suffering a loss. Companies are allocating a portion to USDC to use in decentralized finance protocols. The creator and gig economies face payment challenges. Platforms like YouTube and Upwork need to pay millions globally. Small, frequent payments are ill-suited for legacy banking's high fees. Circle enables cost-effective mass payouts. Platforms use Circle's Payouts API to instantly send earnings in USDC, ensuring workers keep more of their money. Unstoppable Domains uses Circle's APIs to pay affiliate commissions in USDC. Web3 gaming platforms use USDC to pay out tournament winnings. Circle's infrastructure makes innovative business models viable, creating a more inclusive global digital economy. Circle's success is reflected in USDC's meteoric adoption, a clear indicator of product-market fit. In early 2024, USDC's circulation stood at over $33 billion, making it a top stablecoin. This scale demonstrates the trust businesses and users place in Circle's flagship product. Circle's revenue model is tied to USDC's success. The company generates income from interest earned on its reserves. In 2023, Circle reported over $1 billion in revenue and a net income of several $100 million, marking strong profitability. USDC is available on more than 15 blockchain networks and has partnerships with major finance and technology companies. Millions of wallets across 190 countries hold USDC, with trillions in annual on-chain transaction volume. Circle's main competition in the stablecoin world is Tether and its USDT token. USDT has been the dominant stablecoin by market capitalization with immense liquidity. Circle has strategically positioned USDC as a different product, focusing on trust and transparency. Circle provides regular third-party attestations and has enlisted BNY Mellon and BlackRock to manage its reserves. During market stress, USDC has seen its market share grow as users seek safety. USDC is becoming the preferred stablecoin for legitimate business use cases. This is a market bifurcating based on user needs, one for trading, another for enterprise-grade finance. Circle is building a parallel ecosystem for the long term. Circle is competing with fintech giants like PayPal in the digital payments market. PayPal, a dominant force for 2 decades, boasts a vast network of users. They've also entered the stablecoin arena with PYUSD. Circle's approach differs fundamentally, leveraging open blockchain infrastructure. This enables interoperable global payments at lower costs. For businesses, the key advantages are cost savings and programmability via smart contracts. Circle aims to provide the infrastructure for the next generation of financial services, betting on open systems to power the future of internet commerce. Within the core crypto industry, Circle also competes with major exchanges that are expanding their service offerings, most notably its own early partner, Coinbase. While the two companies still collaborate on managing the USDC stablecoin through the Center Consortium, they are increasingly becoming rivals in the race to provide financial infrastructure for the digital asset economy. Coinbase has leveraged its position as a leading retail and institutional exchange to build out a suite of services that overlap with Circle's offerings. This includes Coinbase Commerce for merchant payments and Coinbase Prime for institutional custody and trading services. Coinbase's primary strength is its direct relationship with millions of retail users and thousands of institutions. It is the main on-ramp for many people entering the crypto space, giving it a massive captive audience. The company is aggressively building out its Coinbase Cloud services, aiming to be the Amazon Web Services for crypto, providing developers with nodes, staking services, and other essential tools. Its introduction of Base, an Ethereum Layer 2 network, further deepens its ecosystem, creating a new blockchain where it can encourage developers to build applications that naturally integrate with Coinbase's products and services, creating a powerful flywheel effect. Circle's competitive edge lies in its singular focus and its protocol-first approach. While Coinbase is building a broad, branded ecosystem, Circle is focused on making USDC a neutral and universal piece of infrastructure. Circle does not operate a retail exchange, which allows it to be a more impartial partner to other exchanges, wallets, and fintech apps that might otherwise see Coinbase as a direct competitor. By focusing on APIs and open protocols like CCTP, Circle positions itself as a foundational layer that can serve the entire industry, including Coinbase's rivals. This neutrality is a strategic asset, making it the Switzerland of digital dollars. This creates a fascinating dynamic. Coinbase wants to be the all-in-one destination for the crypto economy, a branded super app where users can trade, spend, and build. Circle, in contrast, wants to provide the unbranded plumbing that powers thousands of different applications across multiple blockchains. It aims to be the Intel inside of the digital economy, providing the core processing power, USDC, that every application needs, regardless of where it lives. The competition is a classic battle between an integrated vertical platform and a specialized horizontal infrastructure provider, and the outcome will shape the architecture of the future Web3 ecosystem. When analyzing Circle's position against its diverse set of competitors, its unique value proposition becomes clear. It is not just a stablecoin issuer, a payments processor, or a crypto company. Circle has strategically built a business that sits at the unique intersection of all three. This hybrid identity forms its strategic moat, a set of durable competitive advantages that are difficult for others to replicate. Its core strength is the combination of a fully reserved, transparent, and regulation-first digital dollar, USDC, with a powerful, developer-friendly platform for payments and treasury. The first pillar of this moat is its deep commitment to regulation and institutional trust. Competitors like Tether cannot easily replicate the years Circle has spent building relationships with regulators and embedding itself within the traditional financial system through partnerships with giants like BNY Mellon and BlackRock. This regulatory-first approach makes USDC the only viable option for a large and growing segment of the market, including publicly traded companies, large enterprises, and regulated financial firms that cannot afford the reputational or legal risk associated with less transparent alternatives. This creates a high barrier to entry for any new competitor. The second pillar is its robust API-driven developer platform. While fintech giants like PayPal have payment platforms, they lack the native programmability and open network benefits of a blockchain-based system. Circle's APIs empower thousands of developers to build new products, creating a powerful network effect. The more developers that build on Circle, the more useful USDC becomes, which in turn attracts more developers. This ecosystem is a powerful asset that a traditional fintech company would find difficult and costly to build from scratch, as it requires deep expertise in both blockchain technology and developer relations. Finally, the third pillar is its strategic neutrality. Unlike exchange-based competitors like Coinbase, Circle does not operate a primary retail-facing brand that competes with its own business customers. It is positioned as a neutral infrastructure provider, happy to power the back end of any application, wallet, or exchange. This allows Circle to forge partnerships across the entire industry without conflict of interest. By combining these three elements, unmatched regulatory trust, a powerful developer ecosystem, and strategic neutrality, Circle has carved out a unique and highly defensible position in the rapidly evolving landscape of global finance. Circle's growing influence is having a profound impact on global finance. For decades, cross-border money movement has relied on correspondent banking, slow and expensive. Circle, with USDC, challenges this model, offering open, global, 24/7 public blockchains. This upgrade reduces friction for businesses and individuals. A US company can pay a Southeast Asian supplier in minutes at a fraction of the cost. This transformative shift unlocks new economic possibilities, democratizing access to the global market. It introduces programmable money, automated payments tied to real-world events. Circle provides the tools to build this intelligent, responsive economic future. The financial industry is taking notice, reevaluating systems and strategies. Circle's success has accelerated conversations around digital currencies and asset tokenization, proving demand for faster, cheaper, more open global value transfer. One of the greatest risks and, paradoxically, one of Circle's greatest strengths is the evolving regulatory landscape. The company has built its brand on being a regulation-first entity, proactively seeking licenses and engaging with policymakers. This strategy has served it well, earning it trust and key partnerships. However, the rules governing stablecoins and digital assets are still being written in major jurisdictions like the United States and Europe. The final form of these regulations could have a massive impact on Circle's business model. Clear, well-defined rules could provide a massive tailwind, legitimizing USDC and accelerating its adoption by mainstream institutions. Conversely, unfavorable or poorly constructed regulation poses a significant risk. For example, if lawmakers were to impose rules that severely restrict how stablecoin reserves can be managed, it could impact Circle's ability to generate revenue from its holdings. Stricter than expected capital requirements or burdensome reporting standards could increase the cost and complexity of issuing USDC. An even more extreme risk is the possibility that governments could decide that only chartered banks are permitted to issue stablecoins, a move that could potentially legislate Circle's core business out of existence or force it to become a bank, fundamentally changing its structure. The global nature of Circle's business adds another layer of complexity. The company must navigate a patchwork of different rules across dozens of countries. A permissive regulatory environment in one region could be offset by a highly restrictive one in another. This creates significant compliance overhead and legal uncertainty. Furthermore, the political winds can shift quickly. An administration that is friendly to financial innovation might be replaced by one that is more skeptical, leading to sudden changes in regulatory enforcement and priorities. This political risk is a constant factor for any company operating in the highly scrutinized world of finance. Despite these risks, Circle's proactive engagement gives it a seat at the table. CEO Jeremy Allaire and his team are actively lobbying and educating lawmakers, attempting to shape the future regulations in a way that fosters innovation while ensuring financial stability. The company is betting that its track record of transparency and responsible management will position it favorably, no matter what the final rules look like. The outcome of these regulatory battles will be one of the most critical factors determining not only Circle's future success, but the trajectory of the entire digital asset industry for the next decade. Beyond regulation, Circle faces market and technological risks that could challenge its growth. USDC's value is pegged to the US dollar, and revenue is tied to interest earned on reserves, making Circle sensitive to macroeconomic conditions and Federal Reserve policies. Intense competition from stablecoins like Tether, fintech players like PayPal, and potential US digital currencies also pose threats. Technological risks are ever present. Circle must innovate to maintain its value against evolving competition and cybersecurity threats. In conclusion, Circle's journey to a cornerstone of the digital asset economy is a tale of vision and strategic execution. The company's impending debut on the NASDAQ stock exchange represents a powerful validation of its long-term strategy. By building its enterprise on transparency, regulatory compliance, and trust, Circle has carved out a unique position. Its flagship product, USDC, has become synonymous with stability, serving as the bridge between traditional finance and Web3. Circle provides the fundamental tools that the digital economy needs to grow. It's providing the stable medium of exchange and APIs that will power future innovations. As demand for a trusted digital dollar like USDC expands, Circle is positioned to capture a substantial share of this growth. Its full-stack platform creates a powerful ecosystem. This strategy allows Circle to grow with the entire digital economy. Circle's story offers a blueprint for building an enduring company in the world of cryptocurrency. It demonstrates that long-term value is created by embracing rules and operating in the light. Circle stands as a testament to the idea that the most profound revolution in finance may come from the construction of its new foundational plumbing. Looking forward, Circle has immense opportunity but faces challenges requiring careful navigation. The company will likely focus on expanding USDC's global footprint, integrating it onto more blockchains, and forging partnerships with payment giants like Visa and MasterCard. Success will solidify USDC's position in commerce and finance. Continued innovation will be crucial to maintaining its technological edge. Circle must remain vigilant against regulatory risks and the potential of a digital dollar. Market forces will also play a decisive role. Circle must balance innovation with compliance, defend its market share, and collaborate to grow the ecosystem. Its execution will determine whether it can fulfill its mission.